What's happening, guys? I hope everybody had a fantastic weekend. We have another Sunday video, this time for the 27th of November and the week ahead, and that lands us into December by the end of the week. So I hope that everybody has been making adjustments for the new year. We talked about that about 2 months ago, and I said it was going to come real quick, and here it is. We're already into December. So make sure that any changes that you had planned to make, any choices you were making to start the new year off right, make sure you're kind of starting to check off those boxes so that it's business as usual starting January 1st, and it's not something where you're just kind of pushing it off and then planning to start it, because as you know, it takes a little bit of time to build a habit. So you might as well work out those little kinks and get into the new year firing on all cylinders so you can start January 1st the way you had envisioned. The last couple of weeks, we've been talking all about liquidity traps, and there's been a lot of long opportunities. The shorts continue to pay. There's lots of good opportunities here and there, just a little bit lower conviction, because what happens is they end up fading, consolidate, fade, consolidate, and they're all kind of holding this one line of support. If you don't cover, all of a sudden they're swiping right through the prior resistance, and good luck. And some traders saw that on BGLC, some folks saw that on MRAI. So one thing that we've talked about is, you're either going to be right or really, really wrong, right? When you're shorting some of these low floats or some of these liquidity type traps. Whereas on the long side, you're either going to be really, really, really right or just so wrong, right? It's not really something that just completely tanks. Obviously, you still have market risk, and you need to be aware of which ones maybe you're going to raise in the hole. But for the most part, if you're paying attention to filings, if you're paying attention to the setups that are being rewarded, the themes that are running, and all that kind of stuff, there's been some insane movers. And MRAI, obviously this week, everybody should be familiar with it if you paid any attention last week or throughout the week on scan. But that thing tripled, right? And so this is almost like two liquidity traps in one, and maybe even starting up a third. But you had the first volume over here on the 10th. You had almost 60 million, about 55 million shares traded. And then by day 4 after that move, we were down to 600,000 traded. So as it swiped up and got over those prior highs, like we talk about, and it should look very familiar to everybody, but if you just draw a line right over here, once it got over that 90-cent level, swipes up, that's one liquidity trap, right? It blew out those shorts. Then it came back down, and now that resistance becomes support. Well, that's odd. Why is it holding? Gaps up over the buck and then ramps up, and then once again, now everybody that used this as a backstop, which ended up being around the 150, 160 level, once that happened, stage 2 of the blow off, and it literally had an intraday double. So really nice opportunities there if you've been paying attention. And I'm not sitting here saying I nailed everything. I'm not saying that you should have nailed everything. But what I am saying is that you should be reverse engineering these trades that work so that you can anticipate. So when I say that there's a liquidity trap potential, you're watching that to set up. It doesn't mean that it's a buy right away at all. You need to see it start to ramp up, come back, and then, well, it should have died, but it's hanging on, and it's starting to build, and the volume's coming. Those are all the signs that suggest that there's going to be longevity in this particular move. So that's what I want to be watching on something like MRAI. We also looked at this CDT move, and you can kind of see we had the big volume over here. Now we're coming back. We're starting to set up with potential of a liquidity trap. And for me, I'd probably want to see it over, 190s or so to really get excited. You had the same thing with this WGS, which does not look like much, but we had that first ramp up, consolidate, higher lows, and then on Friday, we had the blow off move. One big thing to remember is that when these liquidity traps happen, you are anticipating the squeeze. So if it ramps up, we talked about this last week, if you automatically start to think we're going to the moon, and it's going to be a black swan, you're reducing the probability of that trade working out in your favor by a lot. right? You're starting to bet on a black swan, which we know it's a black swan for a reason. It rarely happens, and it's very hard to predict. Most of the time, it comes after everybody thought the move was done. Everybody's moved on, and there's still some sort of inefficiency in the tape. So on a situation like WGS, we had the huge blowout, and then it sits back down. That liquidity trap is now voided. And that is why when you're anticipating that blow-off move, you want to make sure that you're locking into some of these big moves. No different than SGD, right? SGD is a situation where this is a super, super volatile, thin name. Huge volume comes in. Then all of a sudden it starts to hold. So again, thinking back, if we had, these days with 35 million shares traded, and then the next day only has 5 million. If you positioned incorrectly and there's no liquidity to cover, you're going to be bidding it up, bidding it up, bidding it up, bidding it up. You either swiped and got out and were smart. You're either going to be bidding it up and competing with others, or it's going to get to a point where you're like, oh, crap. It keeps on going, and then you just swipe the offer, right? And at that point, that's when you typically hit that next liquidity point. We talked about going from liquidity point to liquidity point. It's always thin in between. There's no market in between until it gets to the next level. So once again, and this is also a reminder to myself, sometimes it's best to be prepared with your orders out there. A lot of times, I'll have a wish order in there, just like actually BGLC on Friday. I actually had a fantastic opportunity for the short side, flush down. I actually covered it all at 62 cents. I think I had a little bit left. And then I was like, oh, that was a mistake. I shouldn't have covered it all right there. And so I started to put a little bit back on, and then it started to ramp up the other way. So I was like, you know what? I'm done with this trade because there's a lot of shorts on the wrong side. But point being is if you have ducks out there, a lot of times it's the right move. And ducks meaning have wish orders, have a bid or an offer where you were anticipating it to go before you had any emotional attachment, before the trade had a chance to change your mind, because price action makes us think different things. And when you initially get into the trade, you had a game plan, a risk, and a potential target. More often than not, you're probably going to be right? Because that's something that you've studied, something that you're familiar with, something that maybe you have data on. And more often than not, you're anticipating it to go to this level. When it comes to that level, that greed in us a lot of times is like, well, let me see what else it can do. I'm going to pull my bid. I'm not going to cover here. Let's see if it flushes down a little bit more. Well, guess what? If it doesn't, you're going to end up in a pretty bad situation. So that's exactly what happened on this BGLC, and that's why we talked about this 62, 64 buyer in the room, and then it started to consolidate, held over a VWAP, and then this is a perfect example of easy fade, swipes out, comes back, doesn't break down, starts to firm up over a VWAP. All of this was just stubborn shorts, ignoring this move, because they got let out, right? They got let out. And all of a sudden, third time, they weren't so lucky, so then they get margined out. But again, most of the time when the trade is right, it kind of always feels like you never have enough, right? And then when the trade is not going to be right, a lot of times you always feel like you have too much. And that's because you're probably scaling against the trend, or you shouldn't be in that trade. Most of these trades, I want to be on the right side. I want it to be working. And if I didn't get my full fill, it's okay. But anyway, back to some of those liquidity traps. SGD obviously was one. And then TIVC had a nice opportunity there as well, where it just had the 49 million shares. Then we're going down to about 200,000. Then that next day, it gets over these prior highs and squeezes everybody out. They're not all pretty. They're not all going to have an MRAI kind of squeeze, but the highly predictable 20, 30, 50, 100% movers versus what? 10% downside on a lot of these, max, has been fantastic. So good risk reward. But again, if you're not familiar with it, avoid it, test it out, paper trade it. But go back and look at the last couple Sunday videos that I've been going through them. And I think that it will help you in a big way. Shot, fantastic, really, really good trade. We've been talking about this for quite some time. This used to be JUPW. It was on watch for a potential liquidation trade of sorts. It does have a history. It's not a Chinese company, but this thing just reeks. This thing just feels like a stock promotion. It's going to be interesting to see how this pans out. I don't know that this stuff even really is scientifically proven. Otherwise, it's just maybe some big names that are saying, "Oh wow, it works," you know. So we'll see what happens. But again, I think that if you're trading and you take the the stance that this does not work, it's a fraud, it's this, it's that, I think you're actually going to lose. Because the rate of, the borrow rate, I think it was 700% or something overnight. So that's the other thing you don't take into consideration sometimes. And people are always like, oh yeah, just short it to zero. It doesn't work that way. Just like AMC, you will lose so much. AMC was like 700, 1,000% overnight. And, at some point, it just doesn't make sense to be short anymore. So anyway, that said, we've got this shot situation that just went absolutely nuts. And I think pretty good trap this prior day. And then we had this huge opportunity on this blow-off day, which I completely fumbled. Good trades throughout the morning, reacting to big moves, flushing down, reacting big moves, flushing down. But it ended up holding on the trend. Next morning, the goal was some sort of 520, 550 blow-off move. Fortunately, we got 6. You guys saw where I shorted that off the open into the big gap up. That becomes more of an A-plus type setup, or an A setup anyway. Had this been maybe a strong close this day, that would have been A-plus. But anytime we've got that big gap up, blow out into prior resistance, and then fail. If you think about the times that you've maybe been oversized, where is your pressure point? Where is the point where you're like, oh crap, I made a bad decision, I got to get out. And so for me, I was hoping for 520, 550s blow off. Ends up going over 6, right? Or into 6. So if I had already pre-positioned and maybe I was in there 520, 550s from the night before, 6, I might be making an emotional cover. And I think that's what a lot of people were doing. So anyway, flash forward to right now. The borrow rate's extremely high. So no matter what your thoughts are on this thing, if it just hangs around sideways for a few days, not only are you going to get potential buy-in, potential red show at some point, but you're getting that cost, the opportunity cost of, do I hold this thing and swing it short and pay this ridiculous amount? Or do I just go ahead and move on? And I think that that's what they're betting on. When they came out with the PR from the company, they were ready for that. And they just came in the market and absorbed a lot of stock. So in my opinion, this really feels like the old OTC promos where you can get away with buying like crazy on this first dip. And then you just let everybody kind of slowly get squeezed out. And then the volume's going to die off and it's going to unwind. So I do think that we have the potential of one more good blow-off move. And I think December 7th or so was the forward-looking kind of catalyst. So I think that they kind of want to hang it around until then. I think this is more than just a company with PRs. I think there's a lot going on behind the scenes. I think there's a lot of players involved. I think that there's a lot of funds and funny business and lots of things. So we'll see how it pans out. But I wouldn't be surprised to see this fully retraced back to $1 in the next 6 months or sooner. But right now it is a cult style shareholder base, just like we talked about, and you need to be focused on the edge in the big picture type of trade. I mean the reactive trade for that big picture chart moment, not what you think should be happening and what you think about the company. Because if you trade what you think should be happening with this company, in my opinion, you're going to run into the same situation as GDHG, which, yeah, we know. It's an amusement park. It looks like a dump, and it's probably just an excuse to be public, right? It's probably just an excuse to have this publicly traded 4-letter ticker to be able to raise lots of money. In this case, potentially from the shorts, right? And in my opinion, we're in a situation here where Hindenburg came out over here, which their report was great, and it's probably dead on, and it probably ends in a SEC halt one day, and it probably unwinds back to, zero. But on the front side of the trade, the difference here with a trade like this is, number one, I think this is a lot of wash volume, right? Meaning just churning, 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 churning. People start to make and take positions, shorting it based on the volume they see, but there's a good chance that nobody actually owns any paper, and it's all held internally, with family and friends, with funds, with whomever is promoting this thing. So the point is that when Hindenburg comes out, or any of these other shorts come out, they're offering supply. And if somebody holds all the supply and then they're buying more supply, now it's going to start to kick this can down the road, and we have the potential of an outlier move here. We have the potential of breaking the system again, just like we had, I'm not saying HKD, but same kind of concept where, yes, it doesn't make sense. SEC is probably slow to doing anything with this thing. And it's $1 billion market cap. People look at valuation. They look at the hit piece that Hindenburg came out with, which was, again, fantastic. But front side of the move, supply, demand, it doesn't matter if they hold all the stock and they just bought a whole bunch back from shorts. They can just maintain. The price is going to go up on the borrow, and it's going to end up going circuit to circuit to circuit. So this has all the stars aligned. The risk is SEC halt. The risk is liquidation day. It goes down 80%. But the potential is circuit to circuit to circuit and break some accounts 50 to 100 to 200 or something silly. So again, be aware, be cautious, but same kind of situation. And for me, I always talk about special situations and when the stars align and all that kind of stuff. And we did have that exact kind of situation on a smaller scale with SPRC. Anybody that watched last video as well should have been familiar with this. Every single time shorts are, basically given free money when they short the pop, right? Every single time, trained. This time, we had talked about on the last video as well as all week, this one's holding a little oddly well. So did this one too, right? But they ended up fading off, right? Kind of the same sort of situation there, same sort of situation here. And like I said, once and if it breaks and holds over 7, have an imagination. So we opened up that day, it held, and then it held again. And there was a lot of newsletters going in and out, and it was still holding oddly well. So that's when you saw me go long in the 8s. And then we had that nice circuit halt into the 14s. And that worked out really, really well. If you guys were watching the tape, we talked about it, but there was a 100K bidder, and they kept on up ticking, and then until finally somebody hit it, which I think was a mistake, because then they made them pay. And it basically went straight into a circuit halt after that. The level 2 box, everything started to kind of get a little weird. Volume started to go off like crazy, and then it just went nuts. So either way, high probability, potential setup, nice setup, just like we saw actually on BGLC. I wanted you guys to kind of see how we start to come and we start to ramp, come back, consolidate. You actually can see that same thing right over here. Ramps up, comes back, consolidates over VWAP, right? So if you're fighting that, you're fighting a trade over VWAP. These are all things that you guys know if you pay any attention, but it's all things that we fall for that we just have to be aware of. So reverse engineer, make sure that you are not stepping in front of situations that are like special situations like I've been talking about. All right. I think the only other thing I was going to talk about, AGIL. That one was, oh yeah, this one ended up delisting. This was a great opportunity. Nice blow-off move. I was going to just talk about the looking left level, which was around 23 cents for the reason for this trade. So, see, it was right here, 21. So you can kind of see the blow-off move, and then the consolidation comes back, rejects with all this volume. Using prior levels, using prior lines to help you. Same deal over here. You can see, once again, the support level becomes the resistance. This is what I'm looking for. Not necessarily the front side of the move. Front side of the move works fine. Lesser volume, lesser size, but at some point it seems to always catch up. And again, looking left. Again, just so you can kind of reverse engineer and see why this was a good trade, why this makes sense. All right, other than that, we'll get right into scan for the week ahead. Last couple things. New broadcast, I tested it on Friday. It's going to be more interactive, so we're going to get more traders involved on broadcast in the morning, and then potentially just have a mic available if people want to add value throughout the day. Some people are more aligned with speaking on the mic. For me, it's very hard for me to both trade, push buttons, and talk at the same time. Easier for me to just do text. That's why I always do the broadcast in the morning. Yeah, other than that, Black Friday, you guys got the first look on the early bird Black Friday opportunities. Those sold out extremely quickly, and then those deals are done. And then Cyber Monday starts tonight. So there is a link in the description. So for those of you guys that maybe you did not want an annual or wanted a little bit of a smaller type of subscription, then those are your options for tonight. But let's get to it. As always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. First and foremost, BGLC. It did kind of fade off after hours. This was a highly anticipated potential squeeze. And anytime that it does this, even if it fades off into the after hours session, that to me does not say, okay, it's over. Sometimes it does. Sometimes it just blows off and fades off. But a lot of times when there's the weakness into the 8 p.m., people are most confident. So they're gonna hold it. They're like, all right, I made it past the hardest part. And then all of a sudden 4 a.m. comes or 7 a.m. and it just swipes up and we're back over a buck, $1.10, and they're like, uh-oh, I made a mistake. I should have covered it 79 cents, 80 cents, 90 cents on 8 p.m. on Friday. So anyway, let's see what happens. We might have a gap down here, but for me, I'm going to be watching this 90 cent level. Higher the better. Exhaustion move versus the 90 cent level, I think could be fantastic. I think a lot of shorts gave up on Friday just because they tried it and they got swiped up. They ignored the trend. They got bailed out. They fought it again, and then they had to pay. So we'll see what happens with that. ITRM has been fantastic. This was a nice long idea for those that were watching Sunday video. And then the goal on Friday was 220, 250 blowout. I think we got to the penny. Yeah, 249. But ideally we get some sort of big blowout and then fade off from there. This reminds me a lot of the PRCH idea that you guys should be familiar with that was right over here. This day, I liked it versus the 90 versus the 110, and then it continues to head over. So again, it looks like the early stages of that move. And again, I do like this as a fade. If we were to gap up, blow out, and unwind, I'm interested in the fade. But with this type of volume, I always want to make sure I'm covering and not expecting more. Because a lot of times these just flush, and then they just carry on. People tend to oversize, and then they get run over. PLTR and AFRM have been fantastic traders. AFRM starting to kind of set up for a nice big breakout or a huge fail. Obviously, this is that key line, so watch for it to either set up, base, and squeeze, or clear out, sit back. Either way, be ready for a trade. Yes, I'm not making a call long or short. It's a great intraday trader. It's a great name with range. It's thick, and it trades well. Same thing PLTR. You guys have seen when I am interested in it, I do call that one as I see it and as I trade it if I do. Shot, again, same thought process, just cautious with the short side. Yes, I think it's going to be a great unwind, but I do think that everyone is doing the same thing. It's no different than EJH, right? We talked about this one in depth many times, right? What's everybody doing? They're all doing the same thing. Nobody's interested in this thing going long. They're all interested in trying to nail the day that it fades back. And if you guys remember, I had compared it to RETO. We had plenty of those dip days right here, right here, right here, here, right? Same thing HKIT. So it should look familiar. EJH, same deal, doing the same thing. And so the point being is just be aware when everyone is doing the same thing. be cautious, especially if it's not in agreement. 4 is going to be a key level over here. I do think that the day that it breaks back over 4 and squeezes, I'm going to be interested that day. But until then, I want to be a little bit cautious with being on the short side in any capacity. Failed follow through. IBRX, you can see the topping action over here, 420, 440 kind of exhaustion area. 4 for me is sort of the breakdown level for potential failed follow through. And then I think 390, so you can kind of see each day these flush down. You know, you can see that 390, 390, 390, and 390. This day over here, remember, sometimes they break under key support only to reclaim it to work out anybody that's price sensitive on the long side, or potentially work in shorts before they push it back up. So in this case, we had a little dip in the rip. Now we have that clear out move, right? So anytime that there's a dip and a rip on a candle, the only thing that voids that setup is an exhaustion move, meaning a candle that ramps up, sits back, right? So you have the dip and the rip, and then exhaust out, sit back. So 4 is a big level for me. HKD, great trade on Friday. This one always does this. It always has these huge pullback days, then this fake day, and then it goes later on, right? And same thing over here. It breaks down on the daily, kind of rebounds one day, sits back, then squeezes. And they did the same thing again every time. Ramps up, fails, and then they go for it. So that could start to move other names like HOLO and I think what we saw, AXTG or whatever that one was. Is that the right one? Or is it ATXG? Yeah, ATXG. So you started to see the volume go across all these other names. And that's just kind of to be expected anytime HKD moves, because as we saw it before, it started to move, you know, dozens of other Chinese companies. MNY, another liquidity trap playing out. This was an idea earlier in the week. At this point, I'd be watching. We're getting right into some key levels. So I would love to see sort of an exhaustion move over here, and I would review MRAI for sort of the concept there. GDHD, we went over it. Same thoughts. Again, highly risky on the long side. Could halt at any time. Unlikely, but there's always a chance. Anytime there's a chance, I think it's worth noting. But stars are aligned, right? Short piece came in there. You know, it's not going to take a lot to push this thing, especially if they have a couple 100,000 shares short. And then they start to continue to churn shorts and get them trapped. When a highly regarded, highly respected hit piece comes out, if the trade holds, there's a problem, right? And there's just not enough sellers. The idea behind a hit piece or a negative research article is that you're convincing the main holders to sell. And when you have these huge unwinds, it's because people, you casted enough doubt that these folks that have a lot of shares are like, it's not worth it. Let's liquidate, right? If there's nobody to liquidate, and then the only shares that are for sale are from shorts, that's when the problem starts. So anyway, I wrote a little bit more. You can check the link in the description, but check that out and see what I think. MLGO, same deal. Liquidity trade. Like, this is a cleanup move, another big cleanup move, and it's been holding since. And we talked about this one in the room the other day where there was huge offers, basically at this, same as the VWAP level, but huge offers this day, kind of trying to break it down, trying to work out the last bits of people, like 300K offers, 370K offers is what I saw. And to the trader, if you're price sensitive, you're like, oh, I got to get out, right? So you sell. Or to the buyer, you're like, ain't happening. Or to the shorter, you're like, well, I'm going to short against this huge offer because worst case, I'll just cover into that huge offer. Well, what if the big offer goes away? Well, that's what happens, starts to march up. So in my opinion, we know this one has a history of all of the above. Everything, it checks all the boxes for us. We're familiar with this from way back. So it could be the start of a walk up, just like we have been seeing this past week on all the trades that I gave you guys for walk up trades. Next up is SPRC. I am still not necessarily super bearish on it. I still do think that we could have a day or two of consolidation, and then if it doesn't go away, I think we could have, basically all the shorts from Friday start to cover into maybe Tuesday, Wednesday, Thursday range. So we'll see what happens. But again, micro float, kind of an oddball merger type of situation. Lots of good volume, and we'll see what happens with this one. But I do want to have an open mind as far as what could happen. INVO watching, nice liquidity trap set up on the daily. ANGH, same deal. We have a liquidity trap there. Again, liquidity trap does not mean go long. Liquidity trap means this is a potential of turning into a nice blow off type of move. You still need to see the setup, maybe a ramp, consolidate, should have died, starts to firm up, volume starts to come back. That is the most important part. Not everything is a long. A lot of times you could be buying that one last candle that just has all the, the covers come in and then that's it, right? Because we're anticipating a cover. We're anticipating that squeeze. That's what a liquidity trap is. So what you want to do is make sure that it lasts more than one candle. And if you guys remember, I went over SGD. I wasn't interested at 110, 120, 130, 150. But once it proved and soaked at 170, that's when I got interested that day that it went crazy. Then we've got ICVX. Check out the daily here. You got to scroll out a little bit, but this one has a history of huge moves. If you guys remember this day way back, this is a nice ripper. But we're at a very, very key level. So if this starts to break out, it could start to skip up on air. PRCH should look familiar. This one was a nice idea last couple times on scan. Under a buck 10 is the risk. And now at this point, if it starts to build versus 150, that one interests me as well. So anyway, that's it. I hope you guys have a fantastic rest of your weekend. We'll catch you guys in the room. Welcome to all the new members. If you have any questions, reach out. We do have, like I said, we're doing the new broadcast. We're going to have Emil's going to come on there. Nick's going to come on there. Stan's going to come on there. Sam is going to come on there, as well as many others. So just to start, we're just trying out new different things, just because there's just so much value in the room, and sometimes people just need that little kick in the butt to add a little bit extra value. And hopefully you guys have seen all the changes and all the scanners and all that kind of stuff. At some point soon, we'll be kind of showcasing all the technology that we built, because I think that 99% of the people that are not in IU still think that it's just a website about me, which is obviously not the case. So anyway, see you guys in the room tomorrow. The winners for the comments are right in the blog post, so just click the link. As well, one thing that I wanted to say was as always, I always appreciate your key takeaways, but leave me a concept you'd like to see me go over, and I'll pick one of them or two and go over that concept in the video next week, as well as ship you out a shirt. All right, guys.